Rob, how was the meeting?
Kevin, we had a great conversation with the president. The purpose of this meeting was really to talk about the regulatory burden on community banks and some of the things that could be done to remove some of the impediments to make it easier, more effective, and more efficient for community banks all across the United States to serve their customers and clients and communities. So we just had a great hour with the president.
One of the things, first I'm hearing Treasury Secretary Stephen Mnuchin was there, Gary Cohn was present. One of the things that we're hearing on Capitol Hill is this threshold about what actually qualifies for there to be a community bank in terms of regulatory relief off-ramps. Did that threshold come up, and where does that stand?
We did. We talked about a whole host of issues. We certainly did talk about these artificial asset thresholds. So when you're a bank and you jump over one of them, all of a sudden you're subject to more additional regulatory.
Where do you want to see that threshold?
Well, they should, first of all, you should, in a utopia, we get rid of thresholds altogether and just look at the underlying risk set of a bank. But in the absence of said utopia, raising them, obviously, we think makes a heck of a lot of sense.
So which range?
Well, we were going to move them as high as we can because right now there are rules. There's a lot of Dodd-Frank has trickled down and impacted these small community banks from all across the United States. And so some of the way they're being examined would be consistent with examining a much larger institution.
10 billion? 15 billion in assets?
We didn't go into great detail
on
on numbers, but we did talk about some of the things that need to be changed through legislation. We also talked about some of the things that could be changed, Kevin, through having new regulatory officials at these entities.
Let's talk about that. Federal Reserve Vice Chair of Supervision. We still don't have a name. A lot of moving parts. Representative French Hill at one point was in the mention. He has said he doesn't want it. Other folks dropping out. Where does that stand in terms of a timeline for when we're going to get these appointees? Well, I mean, investors need to know this.
Sure. Well, there's several coming up. There'll be a new appointment at the OCC in the weeks ahead. Same with the FDIC. At least 3 governors at the Federal Reserve, one of which will be involved in supervising and regulating all banks, and then another will be a community banker. So there's lots of really important positions. In addition, of course, to the ultimate CFPB director. We did talk about that with the president.
What did he say? Where does he stand on the Consumer Financial Protection Bureau?
This president definitely understands the need to have people with real-world common sense experience at these regulatory entities. So we didn't talk names, but we did talk about the need to have people who understand the important role.
Does he want to keep it, or does he want to get rid of it entirely?
I'll let him answer that question, but we certainly did talk about how the regulatory rule set for this meeting was about community banks today and how they could be improved so that we can get rid of some of the trickle down, how they could be tailored better so that some of these impediments that make it hard for community banks to serve their local clients and customers could be streamlined, improved to kick up lending. One of the themes from this meeting was that, these community banks are doing okay, but they could be doing much, much better. Yeah. And that's something that this president's very interested in.
And when I talked to some of my sources on the House Financial Services Committee, when I talked to the chairman, Jeb Hensarling, of that committee in particular, they still feel like they might be able to get financial deregulatory policy passed within this first year. Is that still a commitment from President Trump, from Treasury Secretary Mnuchin? Is that still the commitment?
I'll tell you, we, as the CEO of the American Bankers Association, we did discuss that today, the need to push legislation in a timely manner. There's definitely a commitment on the part of this White House to do that. I've met repeatedly with Chairman Hensarling and many of the members of that committee. They know that we support the legislative process moving forward. So we're interested in working in a bipartisan, common sense way to get this done. But definitely we did talk about the need to do this sooner versus later in the meeting with the president.
So bottom line, community bank regulatory relief coming this year?
We sure hope so, and we're going to push rigorously to make that happen.